Okay, let's get right into it. We're going to look past the beaches and straight into the balance sheets to really break down Goa's real estate market for 2026. And look, this isn't about finding a vacation home. This is a cold, hard, data-driven blueprint for institutional investors, mapping out exactly where the value is headed.
So what's the big story here? It's all about this massive paradigm shift, which honestly, this slide just lays out perfectly. For the longest time, Goa was a vacation enclave. You know the model, a short, 4-month tourist season and a ton of speculative land deals. Well, by 2026, that's history. It matures into an institutional hub. And the really crucial part? The engine driving this whole thing is a new 10-month economic cycle. That's a game changer, fueled by corporate migration and the arrival of global capability centers. And that is what stabilizes yields and completely changes the investment landscape.
So how does a shift that big actually happen on the ground? Well, it all comes down to one word: infrastructure. We're watching these massive connectivity projects create what the source material calls an infrastructure flywheel. And believe me, it is completely redefining what property value even means in the state. You know, historically, value in Goa was pretty simple, right? It was all about how close you were to the beach. That model, it's officially broken. This slide illustrates the new reality beautifully. It's all about the corridor economy. The real value now lies along these new connectivity hubs that link key points like the Mopa Airport up north, the Tuem Industrial Cluster, and the central nervous system that is Porvorim. Proximity to these corridors, that's the new beachfront. And this slide, wow, this is so powerful because it actually quantifies the impact of that flywheel. It's a 3-step process. First, you get the infrastructure injection, the new airports, the elevated corridors. Phase 2 is what they call logistical unlocking, which is a fancy way of saying slashing travel times. And phase 3, that's the payoff, value creation. The report found that by getting rid of that historical commute penalty, these zones are now commanding a measurable urban premium. And that's resulting in a baseline of plus 32.7% capital appreciation in these immediate impact areas. Okay, let's get specific. Take a look at the Porvorim Elevated Corridor. For years, Porvorim was the single biggest traffic bottleneck in North Goa. It was a nightmare. This project completely transforms it from a choke point into the state's logistical heart. And the impact is immediate. You're looking at a 20 to 30-minute travel time reduction. And what's that done to prices? It's already triggered a 32.7% appreciation in the nearby Socorro and Singolda zones. I mean, it's a perfect case study of infrastructure creating real, tangible value. Now, let's head north and see this exact same principle at work with the Mopa Aerocity ecosystem. The airport itself is just the start. 2026 is all about the full ecosystem coming online. We're talking 7,000 hotel rooms, the whole shebang. This, plus the new link roads, has created what the report calls a durable appreciation corridor. And the data? It's stark. A staggering 40% jump in land prices in Pernem Boom. This isn't just speculation, folks. This is long-term value that's anchored by aviation logistics.
And here's the proof. This table just lays out that infrastructure premium in black and white. Just look at that delta column on the far right. The Porvorim corridor is crushing the state average by over 25%. Pernem Boom, tied to Mopa, outperforming by over 33%. The evidence here is just undeniable. Capital is flooding into the micro markets that are directly linked to these new infrastructure projects, and it is generating some serious alpha.
So we've established how infrastructure is driving all this growth. The next logical question for any investor is, well, where? Where exactly are the highest velocity pockets? Let's zoom in and pinpoint where the alpha and the yield are most concentrated.
This matrix is such a fantastic snapshot of the market right now. On one side, you have a Sagao, the traditional luxury villa market. The report suggests it's kind of hit its peak, a stabilized ceiling. On the other end is Debolim, the professional hub, offering very stable yields. But the real story is right there in the middle, Porvorim, the logistical king. Its performance metric is just off the charts. A 76.97% increase in listing rates over its construction cycle. That's not just growth, that is explosive, infrastructure-triggered velocity. Now let's talk about the value play. As North Goa's premium market gets hotter and hotter, South Goa is really emerging as this institutional value hedge. This slide points to the key number, a huge 40% discount delta between the North's peak prices and the South's luxury entry point. It's just quietly absorbing all this steady, low volatility demand from professionals working in the Verna industrial estate and the aviation hub around Dabalam. It's a very stable, very attractive, yield-driven market. And this illustrates one of the most exciting opportunities on the map, the Tuem Electronic Manufacturing Cluster. As this massive industrial hub gets fully operational, it creates this incredible industrial to residential arbitrage. We're already seeing 15% year-over-year appreciation for plots nearby. But the real headline here is the yield potential. Managed villas that house the incoming tech managers, they could generate ultra-high yields of 10 to 14%. I mean, that is a powerful number for any institutional portfolio.
Okay, so we've covered the how and the where. Now let's talk about the who. The demand side of this whole equation is being fundamentally rewritten by a new class of corporate tenants, and they are single-handedly professionalizing Goa's entire rental ecosystem.
The main driver here is the nationwide boom in global capability centers, or GCCs. As big companies look to de-risk from the major metros, a big chunk of that leasing demand is bleeding into satellite hubs like Goa. But here's the thing, these corporate renters have very different needs. As this profile shows, they demand institutional-grade infrastructure, things like eco-conscious power, high-speed fiber, and professional-grade workspaces. This demand for quality is literally forcing the local market to level up.
And this is where it all ties back to your return. This table draws a straight line from corporate activity to residential yields. The GCCs down in Panaji CBD, they're creating a stable 6 to 8% yield market in nearby Miramar and Telegao. The startups in Porvorim are pushing yields up towards 10%. And then look at Tuem again. The demand from tech managers is creating this massive 10 to 14% yield spread for managed villas in places like Mondrum and Morjam. It's a clear-cut arbitrage play.
All right, we've laid out the bull case, and it's a strong one. But any credible institutional analysis has to be truth first. So now we need to pivot and talk about the critical risks, the regulatory gauntlet that investors absolutely have to navigate to win in 2026.
Look, in a market where land is finite, regulatory compliance isn't just another box to check, it is the ultimate competitive moat. This slide shows 3 key mandates, but I want you to focus on that middle column because it's critical, the rainwater mandate. Starting in January 2026, rainwater harvesting is going to be mandatory for all large projects. This is a brand new, major compliance hurdle. Projects that can't prove their water security are going to face serious valuation friction, period.
So let's just lay out the bear case, no sugarcoating. This is the unvarnished risk analysis. First, like we just said, water and power issues will create yield friction for assets that aren't compliant. Second, what the report calls the seasonal occupancy trap. You know, those generic villas built outside the new professional corridors? They're going to be stuck in the old 4-month model, staring down an 8-month vacancy cycle. And finally, there's systemic litigation risk. The report even flags specific survey numbers in Novalim near irrigation canals as high-risk zones for encroachment problems.
So after weighing all the incredible opportunities against those very real risks, what's the final verdict for an institutional player? Let's pull it all together into a clear, actionable deployment matrix for 2026.
So here it is, the final deployment matrix. This is your strategic roadmap for generating alpha. The report is calling Pernem and Porvorim an aggressive buy because of their early cycle growth and those immediate infrastructure triggers. Dabalam gets a value hold rating, offering stable, yield-driven returns from its professional tenant base. And finally, because of that high encroachment and litigation risk we just talked about, Novolam and Kunkulam are a clear avoid. This is the playbook for deploying capital.
And you know, if you only remember one thing from this entire analysis, make it this quote from the source report. The go-in market in 2026 is all about a flight to quality. That means branded, compliant developers and infrastructure utility, where value is directly tied to connectivity, not just how close you are to the coast.
Which leaves us with one last, absolutely crucial question. We've seen exactly how infrastructure is fundamentally transforming Goa's economy. But the question is, will the state's regulatory framework be able to evolve fast enough to manage that growth and sustain the institutional confidence it's now attracting? That right there, that is the billion-dollar question for 2026 and beyond.